Hello guys, this is binaryoptions.net.au and we are moving on with our mini projects or mini educational series that we are developing on the binaryoptions.net.au website. So feel free to go there just stay on our YouTube channel and see when we are updating our educational content. This one, it is being called finding support and resistances using gaps. Now, as you can see, this is the euro and the US dollar 4-hour chart, and we are looking at the gaps for the 4-hour chart. And basically, either if you're looking on the 1-hour chart or the 4-hour or the daily chart, the area should be the same. When a gap is forming, then you should take that into consideration. Now, the most important thing to consider is that there are two different approaches in treating gaps. Now, the first approach, so number one, or the first approach, is the Western approach. And most likely this is the one you probably already heard, and this is the one you are probably using. And under the Western approach, it is being said that any gap, so any let's say void between candles should be let's say retraced by the following price action. So any gap should be closed. This is the standard interpretation on the Western technical analysis branch regarding the gaps. However, is this correct? Is this what you are really wanting to do, or you really want to trade using a gap? Normally, yes, but take a look at this gap here. Okay, so prices, this is a 4-hour chart. This gap starts from the 13th of September last year in the 2013 on the 4-hour chart, and by the time the gap appears, normally the gap should be filled. Okay, so filling the gap, everybody tries to go short here, so go short, but the gap, and you're trying to fill the gap not from the moment that the candle closes, but the void. Okay, you're looking for the void between the candles. This is the actual gap. All right, so if you're looking at the gap, normally this would be the candle to consider. So the candle that price open next week or next Monday. Let's make this one of a different color so that we are not confused. And of course, the previous Friday close, not the close here, but the highs of the candle. So with a gap, keep that in mind. All the time you are trying to measure the void between the candles. This is the gap, not the highs of the candles or the lows of the candle. Okay, now under the Western approach, it means that any gap should be closed. So using that approach, basically everybody will try to go short here, right? Now we are trading binary options here, so everybody will try to go and buy put options with whatever the expiration date. Well, price is never closing this gap, as you can see. Okay, so if you're going short here, actually if you're going even and buying put options here, you're going to be squeezed out as markets squeeze extremely strong to the upside, and there you go, price is moving like that. So what to do in such a situation? Because on the Western approach, and this is the approach that most of the people, the majority of the people, actually more than 80-90% of traders, they are looking for gaps to close. However, as you can see, this is not happening here. So what to do? Well, the second approach is the Japanese approach. Japanese approach, and the Japanese approach is a bit different than the one from the Western world, in the sense that it is being said that a gap, actually, it is being called a window. So under the Japanese approach, gap equals window. What does it mean in window? Well, it is exactly what it means. A window, a blank space, a void space between the candles in a specific chart. So how this one should be considered? Well, under the Japanese approach, a window is a continuation pattern. So windows equals continuation pattern. What does it mean, continuation pattern? It means that by the time price makes a gap, continuation pattern, it means the price will exceed, it will continue in the same direction like the previous trend. Well, the previous trend was to the upside. Then we had a window or a gap, and price continues. So which one out of the two is most likely to be traded, and how to trade binary options based on these ones? Well, the answer will come in the following recordings. This is only the first recording out of a 4 recording series, how to find support and resistances based on gaps. Now gaps, because this is the common name and the common interpretation using the Western approach, but under the Japanese approach there are windows. So support and resistances, okay, when to buy put options, when to buy call options. Stay tuned for the next recording, please, and keep in mind this is binaryoptions.net.eu, and all of these analyses and recommendations and educational series are brought to you by our official sponsor here, Lioneye.